Good morning and welcome back to Almus Market Mornings. Let's talk about RBI's rate decision. So the central bank is at a place where inflation, at least the headline figures, have been surprising on the downside. But as per their own projections, inflation is expected to rise by the final quarter. Growth is well rounded, but some high frequency indicators have been lacking, like the industrial production, power consumption, GST collections. All of that has lagged, but GST collections lagging can be attributed to the recent cut in the rates as well. Overall, there is a case built up, and even as per markets, that the central bank should cut rates today. But the big issue is what would a rate cut do to an already weak rupee? Let's understand all these dynamics. Good morning, JK. First off, what are your expectations from today's MPC? And second, how do you see it play out for the rupee?
Uh, Good morning, Swaraj. Yes, it's going to be a very dicey situation for the central bank. But looking at various factors, I feel that possibly they can go for a rate cut. Because now the rupee, the main concern from the market was that rupee could weaken further with a rate cut. And now with rupee already having weakened so much, almost 5.5% in the year, and also the central bank also ready to tolerate some weakness in the rupee as it helps exports in view of the impact from U.S. Tariffs at 50%. I think they are not so much worried. They might actually go for one last rate cut, before they pass for much longer. Now, this will come after 6 months of a steady rate in the policy. What it can, on the positive side, I can say that even with the rate cut, India's real rates would be, much attractive compared to others. And this could also be seen as, some sort of a base or a bottom in the rate. So it can actually lead to much more credit growth by investors, domestic investors, and also we can see some animal spirits being awakened in the stock market, which can lead to even foreigners participating. So both the real rates remaining attractive and perhaps the stock market showing good performance in 2026 after having remained sidelined for over a year, and some expressions of analysts also saying that the bottom in the earnings has been seen. So maybe I think on a balanced way, RBI may go for a rate cut, and of course they may maintain the neutral stance on the policy. On growth, they could slightly project a higher growth at 7% versus 6.8%. Inflation from 2.6% projection can be slightly lowered. They will be cautious about inflation also going forward because there's been a lot of base effect advantage, as well as the fact that global commodity prices have been going up. And crude seems to be forming a good bottom near 60 for the Brent. So all this will definitely be, on the cautious side for RBI. So while I myself was expecting them to hold the rate because the rupee was weakening, now that the rupee has already weakened a lot, I think, and their own intent showing that they are tolerating a weaker rupee. So I feel a 0.25% rate cut with other things working in its favor can go for the RBI's move in that direction. Yeah, of course, in rupee we had a lot of action. In the last 10 days, ever since 80 was allowed to break, we have already moved 1.8% in the rupee. Yesterday, of course, in 90.43 was also seen. Then, of course, we did have a host of sellers bringing the rate back below 90. It could be seen as some sort of a profit taking ahead of RBI policy, or maybe a lot of long positions had been built in, which probably led to some unwinding. I mean, nothing changed on a fundamental basis, but except that there is a news saying that the U.S. trade representatives will be in India soon for a discussion. So there is a talk on the trade deal is also reviving a bit. So that can be also supportive for the rupee. Market is already discounted. The trade deal is going to be delayed much more. So any positive news in that regard also can be supportive of the rupee. So in the technical chart also, which I have shared in my today's newsletter, 90.30 to 90.50 is the top of the rising channel that we have seen for the last 6 months, and then the it can retrace to the lower end of the channel, which is coming near 88.80. So technically and fundamentally, possibly retracement is par for the course for the rupee. Not saying huge reversal, but perhaps some consolidation in a lower range is very likely. And of course, we will see what the RBI says, whether they say anything about the exchange rate, with so much having happened. I think some mention about it by the RBI, apart from the standard line, is what I expect. We are also moving into another important central bank meeting next week by the Fed, and the markets are discounting 87% probability of a rate cut by the Fed, despite the fact that Fed is not having any updated data on inflation and job market. There have been bits and pieces of private surveys that we have been getting. Yesterday, we had some, contrasting data from US. We had the, challenger job cuts data that showed there was 71,321 jobs cut in November. Of course, while it was half of what was seen in October, it still, is a very high number. And so far, this year they have announced 1.17 million job cuts, the most since 2020. Another worrying fact is that they have announced 497,000 planned hires, which is 35,000 down from what was announced in 2024. On the whole, the hiring side and the job cuts have been on definitely on the higher side. So the total employment is definitely reducing. At the same time, initial jobless claims slumped by 27,000, and it's at 191,000, and and that is the lowest number of claims that we have seen in September 2022. Now, there is something that we need to note, that employers are now adopting a no hire no fire policy. So with no firing, there is no additional new claims that are happening. However, the continued claims, that is people, which represents the possibility of people getting new jobs, those who are lost, is also lower. That is why the continued claims are continuing on the higher side. So the two contrasting data on the headline. However, underlying, I see a weakness in the data. Today, we will have the PCE price inflation data, but again, that will be for September. So I don't think much can be drawn from that. A lot of things have happened since then, so there will be less importance on that. But I would probably look at the preliminary report of Michigan survey, where the employment and the price component will be very closely looked at. On the markets, the so-called Hassett trade, where markets assuming a host of rate cuts in the coming months, and then, I mean, not in the coming months, like in the year 2026, once Powell is replaced by Hassett, about which the market is almost convinced. That had led to fresh selling in the dollar. That has paused a bit, not reversed, but paused a bit. People are also looking at what BOJ will do. And right now, they are expecting BOJ to move the rate higher by 0.25%. And although this is well discounted, so BOJ should have a less worry whether this will have a very disruptive move in the yen or the markets. So since it has been well discounted, they will be cautious. Even if they hike, they will be cautious about the future guidance, and they will continue to talk about, having to see how the growth and the consumption pans out in the coming months. So on balance, I expect BOJ to move the rate higher. But with BOJ, I will always give some scope for disappointment in this regard. So overall, markets are heading into the December month with, I think post FOMC, I don't see much action happening in the rupee. Although, a lot of market, at least the traders, are talking about a seasonality for the dollar. And December is always a month when dollar falls. And we'll wait and see whether that happens. Thank you.
Thank you, JK. So, Rupee already having weekend. Today's RBI decision may not they may not really be very concerned about that because it's happened in their sort of watch, and they also don't seem very, very concerned. That's the narrative that's going on. Because since 8880 broke, we have seen about 9043, which was yesterday in a very short span of time. But yesterday late trading, we saw some strength in the rupee. So today's RBI decision expected that they will be cutting rates. Next week we have the Fed, where again a rate cut is expected. Bits and pieces of private data now showing contrasting picture. So that's something to keep in mind. Today we have the PC inflation data, but that will be for September. So not much of significant importance to that. And an important narrative that's building up in the US is the Hassett trade, as JK mentioned. It's that when once Powell gets replaced by Hassett, who's a Trump nominee, there will be a host of rate cuts. So that narrative is slowly building, and we'll keep an eye out for that. That's it from Studio. Thanks for listening. Have a good weekend. We'll catch up on Monday with the fresh round of updates.